trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to take a look at July wheat. We were looking at that yesterday and pointing out to the fact that we were making multiple ABCD patterns up here at 69.22. The high was 69.26, went 3 cents higher than the projected price, but that's multiple patterns completing there. You can see double ABCDs, and yes, that would be a 3-drive. That would be drive 1, drive 2, and drive 3. We'll draw that in. The reason why I'm focusing on this was for 2 reasons. One is I wanted to show you the pattern and show, hey, sometimes these things don't work. Perfect example. Hello, operator. Take a look at copper. We thought the high in copper was going to be 469. We're 30 cents a pound higher than that today, folks. So when they fail, you got to get out of Dodge. But this is an interesting one, and I'm going to show you why I think it's interesting. The fact that we made double patterns up in this area right here. Very important, okay? Now, what we want to do is we're going to be doing this show on Friday the 24th. I'll be trading live between 9 a.m. to 12 p.m. New York time, where we trade the markets. And this is the kind of market that if we get this kind of market, we don't know where the markets are going to be. It could be copper, it could be cattle, it could be anything. But what we want to do is we want to look to see where our opportunities are going to be. So what I'm going to do now is just going to go down to a smaller time frame, just 8 minutes, okay? That'll give us to where we are, okay? There was our high right up in here, okay? So what we look for is we look for the first 382 retracement. So all I'm going to do now is to bring this out and show you where we were. Now, the first retracement that we had was certainly tradable. This was this one right here. We came down about 15 cents from the high. We rallied up to the exact 61% retracement. But the one that we're looking for has 2 things that we really like to see. One is the 382 retracement. So I'm going to put that up here right now. And there it is right there. And as you can see, it's doing it in A, B, C, D format. Now, folks, this took a whole hour. And I know an hour is a very short period of time. However, if you're trading these markets intraday, these are very, very powerful for 2 reasons. One, the amount of money that you have to risk in order to put the trade on is very, very small, yet the profit potential is truly immense. Now, when you see this pattern like this, and you see the 8, we'll just draw it in here for kicks and giggles, since we have a little time here to do this. Our guest at the break will be Peter Elides. There's your 382. Now, the 382, when you see this, is going to form the A, B, C, D pattern, which will tell you where your first objective will be on this. So if you drew that in, you put it down, you'll see it comes right down to the 1.618 level at 671. But stay tuned, folks. There's more. Let's assume that you missed that and you came in today just as the market was opening, okay? And you were aware of these things that we're looking at, like where would be the 382 retracement? Well, you know that you have a high back here, you have a lower low, so you have to reconfigure where the 382 would be. So you go from your high down to the new low right here, and right on the opening, there it is. It makes it at 685. Now, from 685 to down to 666 is $900 with a risk of about $250. Now, again, using the same idea that we were watching, is you go and you take a look from your last high down to the new 382, and that tells you that the price objective would be right here at 668, and the low was 667 3/4. So that's pretty close. Now, what would we do now, Larry? Well, let's do the same thing. If we were looking that the market is going to repeat over and over again, we're going to look for another 382 pattern. So we're just going to, this is what we do on Friday, folks. Market here, just like this. And there's your 382. Just hit it just a few minutes ago at 66. I know these are small, but they work. Let me show you one other thing. We know from Andrew Lowe's book, Non-Random Walk Down Wall Street, two things occur in all markets that are tradable by human beings. ETFs and cryptocurrency people, well, it works in cryptocurrency people too, but hold on one second. We're supposed to hit 100 degrees for the first time this coming week, and we haven't had a, we went 70 years, folks, without 100 degree without having 100-degree heat in April, and we went. That's the first time in 70 years that we haven't had a 100-degree day. In 100-degree for Tucson is balmy, folks. That's like 80 anyplace else. Okay, there was the last rally. We went from 787. We rallied 12 cents. Okay, so we're going to see if it repeated it again. And if you come down and see, perfect repetition. Do you see that, folks? This is what we try to look at: repetition and pattern. That's what we're looking for. So those are the things. I hope you can join us next Friday. Now, this is going to be 3 hours of live trading, folks. I'm not going to be doing any teaching. I'll be showing you these patterns, and if someone has a question, I'll show how it lines up and what we're looking for and what the probabilities are. But as far as the teaching part, I limit it because we're there to make some money, and that's what we've been trying to do. And so far, that's been been working relatively okay. Okay, now let's get to where the pedal meets the metal. We've got something in play right now that we've been talking about last night on the videos, and we've had some rock and roll action. We're going to start out with the heating oil, because the heating oil, I want you to see this, because there was our objective on the heating oil right here at $2.40. Now, if you look up in this and we go down to the long-term daily, you're going to see that there was our price right there, 2012. The low was 2002. The low was 2.414, and we got to 2.412. Now, look at this, folks. This is really an amazing thing, because after we hit that level right here, we rallied well over $1,400, and then we came back down and have been testing it again. Now, if we look at with the gasoline, we're looking at the same thing in gasoline. Now, here is the shorter term picture on the gasoline that we're looking at. You can see we were measuring these last legs down, but if we look at this on the long-term daily, because that's what we were watching, there was our pattern right here, and all we're waiting for is to see this pattern right here unfold, which we've already had unfold. There it is right there, coming in, and it's trading there right now, 2.457. The low has been 2.455. So it's setting right there with everything that you could possibly ask for. Now, I don't know if this is going to hold or not, but you know what, folks? Nobody else does either. So all I'm saying is, but look at this. After we hit that level the first time, look what happened to gasoline. We had a rally, okay, at 5 cents a gallon. That's $2,000. Holy moly, guacamole. We got rock and roll rolling over here, and we'll be covering crude oil when we get back. 877-927-6648.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I want to finish up with this crude oil complex because I think it's relatively important. Here it is over the last week in gasoline. And as you can see, over the last 4 days, we've now completed the ABCD pattern here. On the far left, you can see there's the 1.618 expansion. That's at 24.49. And if you look at this on the long-term daily, you'll see there's your 61% retracement here. Your stop would have to go below here, but we are really close. In my opinion now, and remember, opinions are like armpit. Everybody has one, and it usually smells. So what you got to do is you got to make sure that you have your stop in, below this level right here. Now, that's a considerable amount of money. I mean, we'll get this hourly back up so we can see it a little clearer. But make sure that you have a stop in. Now, we've hit both targets in the heating oil and in the gasoline. So let's move on to the big daddy rabbit that runs the whole show, and that is in the old crude oil itself. And here's where we are. This is going to be interesting. This is a smaller time frame, of course, 13-minute. But what we're going to do, you can see the 13-minute has not made the ABCD patterns like we have in the others. But if we go down to the hourly chart, you're going to see here that there's the 78% level right here. We have hit that this morning real early when we made our first bottom. We made that, and then we tested it again here just a minute. So we've hit it twice. That tells me that that's super, super important. We've rallied just a tiny bit from that level. In fact, let's just look at it. Going back to that 13-minute, we'll see what we've done here. You see there was the first bottom right here. There was the second bottom right here. And since that second bottom, and you'll notice on the first bottom, we rallied all this $2,000 rally, folks, in crude oil, $2,000. Then it comes down and tests it again. What I'm trying to say is there's a possibility this could be a major bottom in all of these. Now, okay, Larry, how am I going to know when it's going to be a major bottom? My guess is if you see the market look, the last retracement went right up to the exact 78% level, okay? So if you see this stuff get above 79, and this was 77.70, the odds are this was a major bottom in heating oil, gasoline, and crude oil. Now, we all know that you don't need any news to get these markets to work, correct? I mean, look at the news every day. There's always something about Gaza or Faza or whatever those places are in the world. And then Ukraine, there's always something going on there. And the Straits of Hormuz, there's always something going on that could make crude oil rally a little bit. Looking at this on the long-term daily, just like we were doing before, we made a lower low here, okay, than with the previous day. That's a good sign. And the fact that it couldn't break, hey, look, it's only 40 pips away from this low, folks. So I'm not even sure this is the low. All I'm giving you an idea is that if we get above this level right here, then we're going to have an outside day to the upside, and that would tell us we're going to rally at least a couple more dollars to the upside. Remember 3 days ago we hit that exact 382 retracement here at 79.98? Well, we're $2 below it now, and it hasn't gone anywhere. So we've got something moving in here that could be very, very interesting. All right, so keep that in your quiver and watch how it unruns. I want to get up here to the Dow Jones here because this is one of the few times that we've seen a divergence here in the Dow. Now, this is what's been happening over the last few days. Okay, let me get this up together. So you'll see we had the what do they call those, CPI or whatever it was. There was the 382 last night, okay, right there at 39617, and the market broke all the way down 200 Dow points. And if you have that, that's going to tell you where your ABCD should end. And there's your AB, there's your CD, and how close did we come to the bottom? Oh, it didn't even come anywhere close to the bottom. But let's look what happened at this rally right here. We have to go to the hourly chart because when you see new lows, the one thing that you have to do is to change your perspective of where the market is supposed to go. So we need to get that longer time in. We need to get that 4 hour in because that's where the low is. There's where we want to be watching. Here's the area that we want to be seeing. We have that ABCD. You know we made the 78% level easy enough. Hit that spot on just the other day. So our first rally back would have been right there. That would have been your 382 at 39650. We're now trading at 39502. This is the first time that we've had one of these during this whole run. This is the very first time. So let's pay attention to what happens over the next few days. Maybe Peter Eliades will have some good ideas of what could be happening, with something like this. Now, a few days ago, we were talking about a potential pattern in the live cattle market. I wanted to bring this up because I wanted to show you what had happened. This is the live cattle, and we're going to be looking, of course, at, we'll do it with the daily here. Okay, here is the live cattle market. And then what I'm going to do now is we were watching for a potential bottom coming in to live cattle, okay? Remember this just a few days ago. So we're looking for the bottom to come in. You see these little 3-drive pattern right here? What we're going to do now is go down to the hourly because if you're trading, to microscopically look at these things, there it is right there. There's your yesterday right on the close. You made the 61% retracement. And then today the market gapped up and has rallied well over $1,000. Okay, now here is where going to give a little bit more of an ad, okay? Now, if we were trading this on Friday, whatever Friday it's going to be or whatever the second or fourth Friday of the month, the first thing, if we see a pattern like this and we miss it, the first thing you do is you go down to a smaller time frame. So you just go, say, to a 4-8 minute chart. Okay, here is the gap up, all right? Okay, now, Larry, what do? We buy the first 382 retracement. So you go from the low of Friday or yesterday to the low early in the morning, and this drops almost a full penny right there at roughly 176, okay, and away it goes. And if you want to see another 382, you want to see another 382, you want to see another 382, that's what you have to do, and that's what gets you into the game for some of these. Now, I don't get all of them, I don't get some of them, I get a few of them, but that's the theory of why this thing works. And in strong trending markets, This is like a broken drum, folks. You can't beat it. I mean, this is just absolutely mother God and country where you've got your risk parameters set up. Look at this. You make a new low on the day after a run up. Took about half an hour to do it, and then boom, 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 all the way it goes. I don't want to draw them all in because they're too small to trade. This is only 50 pips. You can't trade that, but it's a 382. Let's just double check just to be safe. Yeah, there it is within one tick. 382. There's probably another one right there. Yep, I bet it is. Let's just take a quick look at that one too. There it is right there, 382 again. And that leads to your ABCDs, and that's where we are now. Okay, folks, let's live every day in an attitude of gratitude. Stay tuned for our good friend Peter Leides, who will be coming up at the break. And tomorrow we're going to have Mike Moore of More Analytics as our guest, and hopefully we'll be able to get some things going here of what's going on, okay? So I think that's it for the ad here. Let's see if we're there. Yeah, we're good. We'll be right back, folks.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, unfortunately, Peter's going to be tied up today because of the volatility in some of these markets, but we'll have him on again quite soon. Let's talk a little bit here about the corn market. As you'll remember, yesterday we were talking about this on the show because we felt that we were getting ready to make a pretty big ABCD pattern here, which in fact we did. We made the first one right here. Well, you can see it. I just move it over because I just did the same pattern. There it is right there. There, our profit objective there was at 93. The high was 96. Okay, now the other thing that we did is we want to be expecting corn. We really believe corn, beans, all these things are in bullish moves. But now we want to see where we want to rebuy the corn. And we'd like to buy it down here about 20 cents lower right there at 673. You can see the 61% retracement coming in here. But there's two parts of this that is very important. One is when you make a high, like you did right here. There's your first high right here. That took 18 days to make that. Okay, so if there's an 18-day cycle high, and that's correct, when you go to the next low, the next one should be 18 days. We did this yesterday. If you move this over and put it in, the 18th day was yesterday, and you can see what happened. We made a high. Now we're going to be looking at another low right in here. Okay, let's play the devil's advocate here and see if we can all. If markets repeat, like Andrew Lowe says he did, and also Mr. Mandelbrot and Mr. Gartley, some of those other guys that have been around for 1,000 years, well, quite a while. Anyway, this is what we're watching. We're looking for it to come in here at 733. Let's call it 475. Let's just, for kicks and giggles, we'll make it 475. That would be the exact 618. Now, using the same theory, that if we came down in a cycle, okay, we came down in this cycle to that cycle, we want to see how many days it took to go down. And it took 15 days to go down. Actually 14, 18 to go up, 14 to come down. So if that's the case, we got to be looking for a nice little buy in corn right about here in 2 weeks, which would make this right around Memorial Day. Folks, I have to give you a little bit of background here. One of the biggest moves I ever had when I was back in Chicago was in '83, and that was in the soybean market. I was trading, of course, at the Merck, but and the Board of Trade had the soybeans, but we had all the markets there that we could trade, just like you do at home, except we didn't have all this fancy computer stuff. It was all done with Bunko Ramo machines and the big boards at the Merck. We didn't have any computer stuff like this. You had to have a teletype, Western Union teletype, in order to get the intraday chart. Intraday prices had to build your own charts. The only way you could build your own charts with the machines with ADP, automatic data processing. They had a way to do 15-minute intraday charts, but it was $5 per sheet. And believe me, $5 back in 1983 was not a small amount, okay? Anyway, we're going to be looking for a low to come in right about here. That will be right these down. Well, we're going to be doing more than once here. So, and we're right around, this is Memorial Day right in here. So let's see what the weekend is during that time. Well, it goes all the way to the 31st, which is a Friday. So this is the last, Memorial Day weekend is right here, and here's where the 1st of June comes in right about there. So you want to be long on Memorial Day weekend. The reason for that is in 1983, we had a similar type situation with a similar type pattern. The fundamentals, I can't tell you because I don't remember, and they're not important for what we do. But anyway, this is where we would have everything lined up that the market would come down to this level perfectly. All right? So that's what we want to be watching if we get that. Now, let's play the devil's advocate here. Let's say this market is way bullish to know what Larry thinks it is, okay? And maybe we only get a 3-day correction in here, or a 4-day correction. Not 10 days, but just 3 or 4 days. The first thing we want to watch for is, guess what? 382 off of this move. We'll just clean this out right here. And we go from this level right here up to this level right here. And you'll see that the 382 comes in here 15 cents lower right there at 482. Folks, this is Tuesday, Wednesday, Thursday, Friday. If we come in here on Friday, okay, this is going to be really, this is interesting too, because we're going to have a live trading on the 24th, which is pretty close to where we want to be watching. So this might be a really good one. We need to watch this retracement right here for several different reasons. Okay, you see this 382 from the low to the high, that's your 382. Look at this, last time we had a 382, okay? We went from this low, okay, right up to this low right here. There it was right here. The market went from 91 all the way down. It dropped 14 cents to 74. 14 cents off of this, bang, you're going to be right there. So this is what you want to be watching. I'm really bullish corn and beans and all this stuff. So I'm going to be watching this one really closely. The last correction that we had, okay, let's just play the devil's advocate here. Think what these dudes have been telling us over these time, Mr. Lowe and all these other guys. We're going to take a look at this, draw these. The last time we had a pretty good correction in corn, going back in April, we had one that came all the way down here. We came to 77. We dropped 12 cents. That seems like a lot, but that's 12 cents. The next one we did was 14 cents. And the next one we could be looking at is right here at 77. So we need to be watching, or at 84. So we need, that's only 6-7 cents from where we are right now. So this is the key right here, is this 382 right there. Now this would be the largest correction that we've had in the move if we get there, you see, because that was our previous correction. And this one right here would come in right about there, or potentially right about there. So these are the areas that we're looking at. Ideally, if, and we don't live in an ideal world, we'd like to get to right there, because that lines everything up with, the price and time and everything that we were looking at before. So we got things to look at. Now let's do something a little bit different. Let's assume that this 5-cent high was it. So let's go to a smaller time frame and look what we just had a little while ago, boys and girls. For kicks and giggles, there's your high right up here, and there's your 382 retracement right there. It's only 2 cents from where we are, but that's pretty good. And if you think that's right, you look at it, you're going to see that the ABCD on this is to tell us how we're teletyping these things through here. Would bring us down to this level right about here, which is 80. There's your 382 right there. 1.618 at 86. That's down a nickel. Going back to the daily, 86. Yeah, well, we're right in here is where we're looking at right here. 86 comes in right there. That would be this one right here. All right, let's take a break here. 877-927-6648.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, It has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, this is the E-mini S&P making a 3. See, we made a lower low here, so the 382 is right here. But what you have to remember, folks, is on the first move down, okay, there was your first 382 retracement was right here. Okay, you would have lost on that. See, that would have been a 4-point loss because it went above the level you were wanting to sell it. You're right here, right now at 52.48 and a half. Okay, so your stop has got to be here at 252 and a half. So you're going to risk 4 points. It's trading within this ballpark right now, a penny or two. But this is where your stop has got to be right above here, which would be 252.53. So you're risking 5 points. Now, if I get this out of the way here, let's just see if we just had a fast tick here to 40 to 50, but your sale would have been here at 248. I do these all day long. I don't care. My stop is going to be right there, 253. I'm risking 5 points. Now, yesterday, the one we did made 250 or broke even. This one, I'm not sure. All I know is that that's the number that I play with all the time, and it served me well. Not all the time, but most of the time. So your stop has got to be there. You got to risk 5 points. That's mainly it. It follows the number sequences intraday. Just looking at this, okay, there's your high, and then the first move down. This is really tough to figure it out, isn't it? This is your 78% level comes in right there. And when you get that, you know that you're looking at an ABCD. It misses that by a heartbeat. Let's see. The low here should have been 40, and it went to 41, and now we're having to rally back. So I'm willing to sell that 382 rally because the highs, this is a lower low, and we got a high up in here, so I'm willing to take that risk. Yep, sometimes they lose, sometimes they win, but that's what I'm looking at. What I'll do, I've got that set in here right now, because if we get up to this level right here, I will be out. It looks like I will be, but right now I've got a about $100 loss, and it's probably going to be 200, but that's neither here nor there. I'd like to see an ABCD in here, but I'll trade that 382 all day long. Now, I'd like to see it a little bit more of a stronger down move, but that's enough because you did make a lower low. So we're going to get this off the board, and someone had a question. Everybody in the world must be long Apple because they ask that question every single day, and I really don't follow stocks, but we're going to take a look at Apple again, and I imagine it's going to be strong again because A lot of things happening here. Up, it did. It made a new high of that move, folks. Everybody that bought, let me get this out of the way here. Everybody that bought it on that big day down here where we did 170 million now has a profit. And we're a little above the 61%. Well, we're trading pretty much right at it right now. But everybody that bought it, light volume here, but big volume there, and the market came back and, gave them a pretty good chance to. I didn't look at this before, but let's just take a quick look at this. We're done with this volume part. I'm going to take this off because I only look at volume when it's record, folks. We look at Apple like this. I never did this because I don't really trade this stock. But we have the pullback right here, and oh dear, I'll bet you that was exact 382 off of the last low. Let's just double check. There it was right there. There was your low right here. There was your 382 right there at 180. This is a very tight range, but that's what we're paying attention to here on Apple. Now, that one other one is Tesla, so might as well do them both here, make everybody happy. Tesla's really close to a little bit of a bounce, folks, because we had a nice pattern down there. Looks like it's bounced up a little bit. Hasn't really done much. This is what we're looking for, but this is the action to last week or so in Tesla. Let me get this down here so we can all take a quick look at it. Okay, there's Tesla right here. We might have missed this pattern here because let's see, the ABCD did measure to that level, as I recall. Yeah, it measured to, what happened to the tool here? It just disappeared. Hold on a second here. There's your AB leg right here. There's your CD leg right there. It should have kept. What's wrong with it? It doesn't, don't know what that happened. Well, I'm not going to worry about it. But okay, the last rally back. There was our low right here. All right, you had a 3-day rally. Let's just go to the high. Okay, down to our low. And the high today was the exact 382 up there at 179 and change. It's $3 below it right now. Okay, so this is still in a downtrend because this would be a 1-3-5 pattern. It's a 382 off of this number right here. Okay, and if you look at it real closely, and we will, go from your high right here up to your low right there. There's a 382 and a 618 right there. And as you'll notice here, you had a 1-2-3-day rally and down, 1-2-3 rally and down. So that's what it looks like in Tesla here. Okay, now someone asked me about copper. Folks, I'd almost pass on it because, boy, I didn't think this thing had a chance of getting above 470. And as the two writers of the Purple Sage, the Chance brothers said, Nebahachi, famous words of Tonto, Jay Silverheels, the home run partner of Clayton Moore, the Lone Ranger. Let's get up to copper here. He had a silver bullet, not a copper bullet. And here is copper right here. Here's July copper. I know you're not going to believe this, but look at this, folks. We hit it. Son of a gun. 503. Wow, I never thought we'd do it again. Let's go back here in the long-term weeklies. I think that's where we were many, many moons ago. Yeah. I think that was the old high. Let's go back and look. Yeah, it was. It was way above it. Yeah. The old high was back here. Let's look at a monthly. Maybe I know copper was above 5 a long, long time ago. No, it doesn't say that it is. So that's an all-time brand new high in copper, and boy, it is a big one. Now, we've had a big high here today. Let's just look at that's a weekly. Let's get on to the daily here. We've had a pretty good range today in it, too. We've had a range from 505 down to here. So let's use our strategy of the 382 to see if it's working on copper. We're just going to go to an 8-minute. That'll give us a lot of things, okay? Now, we haven't seen anything as of yet that would even resemble a 382. You see it's dropped from 503, dropped 15 cents, and the only rally we had here has been 4 cents. So if you're watching this strategy, like we were locked and everything else you'd want to watch for whatever the 382 is going to be on this next move right here. Folks, I quit being bearish on this thing when it went above this level here because I really thought that was a pretty good spot, and we had a little ABCD here, and it went up. It was good to us. But I gave, of the 2,500 that I made, I gave well over 1,000, well, about 1,200 of it back trying to pick that top, and of course that wasn't what was going on, so that's neither here nor there. Okay, I know what you're interested in is what's happening with the stop and P and not what's happening with anything else. So there's Tesla right here, and here's Apple. Get this out of the way, and let's see if the S&P is back working in our favor right now, but whether that's going to happen towards the end of the day. Remember, folks, your stop is right there, okay? Your first profit objective, you're risking 5. Okay, on a short-term basis, your first profit objective would be 5 points, and that would be down here. 5 and 3 would be 43. Your first profit objective would be right there at 43. 48.5 would 43.50. Okay, 43.50 would be your first profit objective. And if you're a greedy little rascal like I am sometimes, just put your stop above here and let it rip. Okay, let's take a break, and we'll be right back. 877.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks, and let's pay attention to that S&P trade that we have on there at 52.48.50. And remember, we have a stop working at 52.53.50. All I would like to mention is that we did make that last Fibonacci number in the NASDAQ to within 3 points. That means something because we've now completed all of them. All 4 in the indices have made those 78% levels. But the most amazing thing to me is the fact that cash S&P, and you can see there's still buying going on in the market. has, even though it hasn't backed off at all. We've had some, sell-offs in the futures markets, 30, 40. We had a sell-off of well over 50 points this morning. We went from 60 yesterday all the way down to 15. That's 55 points, and came right back, of course. But, the cash didn't back it off at all. I mean, nothing. And but today's the first day that we have a bullish divergence in the gold market. This is the first time that gold has actually gone above a 382 level, had a nice profit in it. It ended up being a break-even trade, but now it is in I'm talking about short term, but short term, you add two short terms together, you get a long term. That means that we could be looking at some little bit higher prices yet in gold, maybe up as high as 23.78. I don't think we're going to take out the high of 24.48 that we made several weeks ago, but we could literally, go up to the 50% level, which is around 23.80 without any trouble at all. There's a glaring sign here looking at the 15-minute charts that, gold and silver have actually turned positive, and you don't want to stand in front of it if that's what your goal is. The goal is to make money, not to lose money. That's the whole key. So let's do one thing, folks. Let's be good, kind to our neighbors. Do something nice for them the best you can, and we'll see you on the flip side tomorrow, and may God bless.